The following is a presentation of TFNN. The Diagnostic Trading Hour with your host, Daryl Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Daryl Martin.
Hi, everyone. Basil Chapman sitting in for Daryl Martin. Usually I have the show before the Tiger Technicians Hour, and, well, of course I did today, but Daryl's not able to be here, so I'm sitting in, and we're looking right here at the chart of the E-mini. This is what I call the naked chart. There are no technicals here. I have drawn some trend lines, but there are no moving averages. There's no Fibonacci. There's nothing, just Chapman wave notation. And basically what we're looking at, there was a left side, right side price time match. Well, it wasn't a match. It actually took a few bars later to break the high that was made at 1450. So 1450 is 10 to 3 yesterday at 2024.25. The S&P minis went down to 2007.50, and then it went up in seven peaks. Well, it went A, B, C, D, E, F, pulls back, has another A, B, C, D, didn't take out that F high of 2017.25, pulls back, and then it starts today at 4:20 this morning, holds nicely at 2012.50, kind of goes sideways, and then all of a sudden it goes A, B, C, and then breaks out to a D, and then does something that we call a Chapman wave instant restart right here. Within 3 bars, Chapman wave instant restart at a D. It's the only place it can happen at. And it takes off to an E/A. Now, there's something that for people who work on the Chapman wave, use the Chapman wave, might not recall because it doesn't happen that often. But let me mention that when there's a really strong leg up from an instant restart that would normally be called E/A, there's a really good chance it isn't an E if it's that big. In this case, look at that move that went from the 2017-ish area right there, 2018, and all of a sudden it takes everything out, takes out the high of 2023.50 in 1 to the 3rd bar without even making a lower low than that leg D. And then what does it do? It goes up, 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 up. And that usually says that is an E, but the chances are it's not E/A. It's more likely to be an A/B, and is very bullish. And then what happens is, and you always look to the left and look how it cleared all that resistance area in the 27-ish area. And then it goes F/B, and this is a G/C. And as I say, probably more emphasis on the C, saying there's a good chance that within the next 10 minutes, there's a little quick pop to 20, 40 to 75-ish, somewhere around there. And then you've got to be careful, because the second buy mode in a move up that's gone through 3 iterations. Look, there's 1, pulls back, it's a buy mode. There's 2, and now there's 3. This is actually the 4th one, is beginning to wear thin. And it says, but what's fantastic about technique is that using the technique, you're able, in fact, to discern and to extrapolate from that information price movement and very often price objectives, because you think that in the instant restart, if it was successful, automatically all these left side highs would become resistance, going all the way to 20, 34, 25. And here's the E-mini at 41.50, up 33 points. Dow's up 263 at 17,431. We just went right through the 300s. This is very important. We've got a divergence between some areas that are just very weak, and we've got some areas that are just phenomenal. And what is phenomenal? And this to me is a sign of strength that I've been talking about for a while. It was hard to believe it. It's just hard to comprehend, hard to get into one's thick skull. And that is if you got the cyclicals, the Dow type stocks, like a GE breaking out, leading the pack, GE is the leader. If you got a General Motors trading up at 35.54, we are along in my opening call, General Motors. If you've got a Ford moving up strongly, if you've got Triple M. Look at even from the time that we spoke about it earlier today, and I was talking about how strong it is. It's gone up even there. I typed in the E. Well, the E is being covered because it's already gone higher than just 20 minutes or 30 minutes ago. Now it's up 6.47 at 156.29. Is this a short squeeze? Is this the end of the move? It doesn't really matter, because what it's done is the weekly chart is broken out to a point where it's testing the 50% retracement. And a 50% retracement to the upside, when in fact this is a market that technically should be going back down to test the 15,900 or so in the Dow. Exactly 50% retracement as we speak. That's really good action. Look at the weekly chart holding the support, and now it's broken above the 9-period moving average with a week to go before the end of the month. It's actually more than a week to go. Nice action. That's all I can say. It's raised the base. That's the most important thing. And you've almost got an A to B equals C to D, a straight line move followed by a diagonal sideways small price move down, and then bam, you break out to the upside. Look at this. UTX, not nearly as strong as Triple M. Well, it wasn't just a moment ago. Now it's even stronger than it was. 99.69. The recent high was 85.50 after making 124.45 high. You know, when you put the numbers together, it's a 40-point move to the downside. A 40-point move from $124 stock is telling you that you've come down. Is that 25%? Should have known that, right? Let me just do this real quickly. What have we got here? I'd like to do it with a couple of the stocks here. So we're looking at percentage change. We've got, what did I say it was? Let's call it 124 to round numbers to do this quickly. 124 to 85. And what do we have? We've got 31% move. Of course, 3 times 4 is 124. 31% move. To the downside, that's like a bear move. So I'm looking at this and I'm saying something's going on here that we've got to recognize. The question of the day, should we be buying UTX Triple M here? Now, when we've looked back historically, and we've seen moves to the upside that are really powerful, there was, any time you wanted to buy was the right time until it came down. So now I have to say, wait a minute, this is leg D in the Chapman wave, and D is what your objective is. That's where you can get the deepest correction. So let me put it this way. Because the quartet, my Dow quartet index, GE, IBM, Triple M, and UTX are acting so well, because you've got an expansion in price move that looks almost like short covering, with brand new buyers, fund managers saying, oh man, those cyclicals, we're out of these cyclicals, they're doing well, coming in. My thinking right now is that on a worst case basis, UTX at 99.71 has support between 95 and 93. So 95 and 93, it's about an 8% correction, if there's going to be a correction, because it's right at the 200-period moving average right now. My suggestion is to have your foot in the door, because this is the area that's being populated the most. The cyclicals. Who would have thunk that the cyclicals, the heavy cyclicals, are doing so well? Well, they are doing well. And what I'm going to say is, I would make a little portfolio. I might even think about it in some way, some form or another, for my subscribers. I was going to do it just the other day. I thought, maybe these are the 4 stocks, just buy them and go away for a week or two. And that would have been the perfect thing to do. So I'm going to make the suggestion. I don't want to get all excited here because this is the day, and I get the question right now because we're at UTX, leg D, Triple M. Could be a leg E. I don't know if this is a brand new A. I'm calling it a leg E. What did I say? GE extended and recycled. So this could, in fact, be a new B, which says that we could rally into next week. Here's my thinking. you could just nibble. You could just start a position to say, okay, these are the stocks that I'd like to have in my portfolio, but I don't want to be buying when a GE is 10 points, almost 50% off its low that was made on the 24th of August. But I do want to have something that is a leader. So you start just a small, let's say you're going to buy 100 shares. So now you buy 20 shares, 15 shares, 10 shares. Just get your foot in the door. IBM, I wouldn't touch. It's out. That's one in any portfolio you want both. Question, is GE in a brand new leg A in the monthly? I'm not going to answer that right now other than to say it is a possibility. I've got it as a G, probably G/A. There are a lot of things that are suggesting yes, that it's not going back to 1937, and that if I'm talking about new highs to come in 2016, geez, it might be before that. Why not? But I'm just going to stay right now and say it's a G, maybe a /A. It's acting really, really well. That's what I'm going to say. Because it hasn't crossed the, I've got a whole month that isn't completed. I don't want to talk about the bar as if it's completed, but it is, in fact, a really important move. In the weekly chart, I don't have any, I have to call it a B, and that's really unusual. So I like what I'm seeing. I like it a lot. And I thought I'd only keep it as an indicator rather than getting in and getting swayed by it. But it would be nice to have been in it and just looking at it and then do the assessment. So that's my loss. Okay, so let's go back. G, a little nibble here. UTX could come back and test the 97.50 area in the next 3 days if it is a peak D. So I would do the same thing. I'd only, at 99.77, I just get my foot in the door, that's all. And the same thing with Triple M. The real buying will be exactly a week from today. I want to go through next Wednesday. So next Thursday, a week from today, will be a perfect day to be assessing the decline because it's broken. Triple M daily is above the 151.30 area, which is the 200-period moving average. MACD is real good, but it's starting to form that M formation that says I'm getting close to a pullback. And I have one indicator here that says just be a little careful about jumping in now because two indicators. Look how it's outlined perfectly. Today's bar, the body of the bar, has 151.36 as the 200-period moving average right there. That's the low, not the wick low, but the opening today was at 151.34, and 151.36 is the 200-period moving average as support. And the resistance in the SMA, the 200-period smooth moving average, is in fact at 156.49, and it's at 156.11, having hit 156.33. I'll be back and we'll be talking more about it, and we'll talk more about those very short-term patterns that we want to look at.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Daryl takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. This is Basil Chapman sitting in for Daryl. This is the Diagnostic Trading Hour, and Daryl's not able to make it, so I'm here. And I usually do my Tiger Technicians Hour, 11 o'clock till noon. And also, of course, my newsletter is called The Opening Call. Very comprehensive look at all the markets and different parameters I give every single day for the different indices as well as the stocks that we have. We are in a mixed portfolio in our portfolio, in the Traders Corner. We have shorts and we have longs. And at this particular point, I don't know if we still have this. Let me just see. Double check. Okay, I think we still have this one short here. Let me just double check. No, I think we're out of that. Very small loss, but it was an experiment in a certain sector that I think is the next one to start to pull back down. So we took, I think, 1.5%, 2% loss. I don't mind that because when we get it right, we really do get it right. Most importantly, what I'm looking at here, I had a question about the XLE. Trading at 68.26, up $1. Now, what was important is that yesterday I wanted to see a close towards the highs and then a push above the 68.37 area, which would say a close. It wasn't just a push, it had a close above there today into Friday. And if it did that, especially if it took out the high of the 19th of 68.58, then I'd be able to say, yes, it should. That's not a peak C1, C2 with a sharp decline. That says that C1, C2 has become a magnet for a leg D to the upside. So now it's a little better than it was earlier. It looks like there's a rotation in the fund managers are saying, hey, if these stocks are going up and I kind of missed them, let's see what we're going to be able to do in the XLE. So the question is, I had a question earlier in my show, and I said, I still don't really see too much in the XLE. I don't really see too much in the XLE, except for the fact that when a market now almost up 300 points, up 32 points in the S&P, up 37 points in the E-mini. Let me just look at that chart that I was showing you earlier on, because this is a very important chart. No technicals, just Chapman wave lettering, and that's it. It should go to a higher high, and there it is. So it's gone G, bap, we've gone right through it to another D. This could even be another instant restart. I can't believe it. Now, so I just wanted to show the chart, the patterns that we're looking at, just based on the lettering in the Chapman wave. Bam, let's go there, take that away. Go back to the XLE. Look at the 120-minute chart of the XLE. See, this is what I'm looking at. It isn't. This is a tough one. It's a tough one because I can see a rally from 68.33 to just above 69.67. So we've got a point and a half. Is it worth taking that when we could get to a D with a real struggle and then start to pull back? Okay, that's not going to be my issue right now. Could I cover it? Danny asks, and I'm going to cover it. There are a couple of patterns that are fighting right now. There was the H, the lowercase h. And if the lowercase h does certain things, not only does it become powerful, but it becomes powerful as an indicator that says, I know exactly what levels to look at. So there's the lowercase h. This is the daily chart. This is the weekly chart. I'll put this a little bit to the side. This is the 120-minute chart. Here's the monthly. It made a peak G, unusual G, at 101.52 back in June of last year. And it's gone all the way from 101 down to the 59 area. That's a pretty, I would say that's a pretty deep correction. So now what we're looking at is if this lowercase h, the back, the low that was made that starts the arch formation, when it comes back down, if it does not, three things have to happen. If it doesn't touch the low of that back, the left side low bar, but instead holds above it or touches it but doesn't take it out, it can rally, and it can rally towards the arch high, or just a fraction above, but it might have difficulty closing above. If it rallies and breaks the left side low bar and closes above or closes below, there's a part A and a part B. If it closes below, it says it will not probably break it certainly won't close above the arch high. And if it closes below, it says it won't even get close to it because it has to do more downside testing. And it has just one bar, maximum 2 bars, to go back to the left side low bar close. The third thing is if it decisively breaks and holds for 2 to 3 bars, doesn't matter what time frame, you've got to watch out. You can get a 1-to-1 from the arch high to the base and invert it like an oval, and you can go down to the bottom. All right, so here we are. We've made the arch formation because it didn't take out the high of 69.67. It went to 69.56. So that's a peak C1, C2 as it's calibrated. But because it did take out the low of 67.04, it went to 67.14. It says it could rally to the left side peak, and that retests the high. I'll be back. We'll talk more about the XLE and give a little example here. Be right back. Basil Chapman sitting in for Daryl. I'll be back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman sitting in for Daryl. Daryl Mark will be back, and I'm just here for today. And most importantly, we're looking at a Dow that's up almost 300 points, and the S&P is up 33. Had many questions here. L said, Credit Suisse quits as gilt market maker. An email, yep, that's interesting. All right, I'm not sure what to make of. That's just not my area of expertise. I'm just repeating that. Sounds like a piece of information that's worth mentioning. Next one, Gary says, a GE overbought, most overbought stock. Let's see. If you got polls and the polls say it's just a short-term phenomenon, and then the person being polled or the issue or the thing goes to higher highs and higher highs and higher highs, that's all I'm looking at. I'm looking at the price. I probably wouldn't even disagree with you at all, because I don't know if Emmett has done such a fantastic job getting out of certain things that he probably should have been getting into. He got into energy at the wrong time. I don't know how it's going up, because I think they've just built up a big cash position. I don't care. It is looking very good. A little toppy in the daily, but only the daily so far. So that's why I was saying just nibble at these this Dow Quartet, 3 of the Dow Quartet, if you're interested in them, because they're acting very well and they're leading right now. Next one was, let's see, Julie wants to know about the rut. Okay, I'm going to go to the IWM. The IWM is the Russell iShares 2000 ETF. You see, it's kind of stuck, and this is what I've been talking about. There's a rotational market, a correction. We even added a short today, which is actually working nicely to the downside in a particular sector that was just one of the darlings for 3-4 years. And now it looks like that's overbought, and that's starting to work its way lower. That's the way I want to do it. Very selective. Longs on one side, shorts on the other. Try to change to trade the major trend. That's why I'm saying the XLE might be okay, and it could rally a little bit more. I'll get back to it in a little while. But the IWM is acting very poorly, and it's suggesting it is involved in the weakness in this market. It is up 1.19%, less than the others. But the chart pattern says this oval pattern here, yeah, it could go to 1-to-1 to test the 118 level in the 200-period moving average. But it isn't doing anything right now. It's just, it's really not participating in the weekly chart. Is very weak. I don't like the IWM, and that's going to be the lagging. Maybe later in the year it comes on strong. Right now, it's not acting well. Next question was, this is a very interesting thing. Price line. Let me just go back if I can do it with one hand. Yeah, there it is. Alan, no, I spoke about that. Who was it? Somebody just sent me saying that they hadn't. Yeah, I have a lot of people who use the Chapman wave methodology, the notations. And the question was, oh my goodness, where did it go? Oh, there it is, Neil. Neil said price line. He has a different wave count for price line in the weekly. He has a D already. And then in January, there was a spike. But no, I do not have that. Look. The low in January the 16th was 1990.69 in price line weekly chart. The very next week, that's the week he's talking about, it didn't go to a higher, it didn't go above 1067.02. If it did that by 1 penny, I would call that leg A because it never took out the low. So I can't count that. This for me, now you might have different data. I really do trust TradeStation's data. Maybe I'm wrong, but I've used it for enough years, decades. Peak A is at 1264, round number high, week of the 27th of February. Peak B is on the 8th of May at 1280.97. Peak C is the round number high of 1395. And remember the weekly chart? What was that weekly chart? Weekly chart was a D. Peak D is a Chapman wave. You go from A to B to C, and D is where you got to be careful. It can go higher, as it did before. Look, it went from a D to an E and an F. There's the T, but the MACD didn't cross negative. And stochastic only briefly pulled back and then went back up. So that gets a plus sign normally, and that should get a plus sign with a red indication just to say that you're a little bit extended, you're in E. And then it goes to a peak F, 6 highest peak, peak F. That's where you got to be really careful. And now look at this. Goes to a D and pulls back. Now it breaks out from this low here, the low of the 24th of August, at 1151.01, just missed a round number, and it starts peak A, peak B, peak C, sharp pullback, holds the 200-period moving average, holds above the 200-period SMA, doesn't break the low that I spoken of, 1151, did I say? Yep, doesn't break it. It comes down to 1192, 1185, and then goes on and goes to a D and an E. Now, does this have the characteristic of that single leg A up that we've been talking about in all the indices for over a week? It does. So this could actually be E/C. But I have to be strict. This is really a C and a D and an E. So in this case, that's what I've got, and it'll have to take price line, which is now down 3. Remember, up about 4 just a short while ago. Not acting all that well. I'm not sure if it's going to make it, but 1395.01 is needed to start leg D in the weekly, and leg D in the monthly. And then it's ready for anything. Doesn't have to come down, but that's where you got to start expecting that if there is weakness, that's the one you got to monitor real carefully. So I think I've covered all those questions in the Dan. Let me show you something else here. I want to go to the dollar. Look at the dollar. I mean, is that a move or is that a move? I had it here as a leg A, right there, gray A, and this is gray B. And what I've been talking about for quite some time on my show is in the context of what we look at, based on the Chapman wave methodology, the different rhythms of the arch or the cup formation, that I felt that this was a sideways consolidation that should take two. Remember, I drew that in the inverse Y pattern. There it is, long leg up. It's like the H pattern that I just, for those of you who are new, the one I just drew for you. Now it's a Y pattern. And what it's done, it's a little unusual. It's created one cup formation, and then a lower one, slightly lower than the 93.13 low back in March or what I think, whatever it was. It went to 92.62, just 50-something cents. And now what you're looking at is it's attempting to try to break in this cup formation, and I had already drawn in the cup formation, the fighting pattern between an arch and a cup. But what's really important about this, now you're going to see something interesting. Look at this cup formation that's potentially forming in the dollar. Now, if the dollar rallies strongly, historically, meaning just over the previous couple of years, let's say, the dollar rally has been accompanied by a stock market rally. And all that talk about lower dollars so that you can get your international, your multinationals to do better, well, it turns out that, in fact, maybe they can do better regardless, because that's what we're looking at right now. Look, this is the resistance level. There's a trend line. That's what we can call a trend line resistance that signifies that if the dollar is on a weekly basis, it doesn't have to close. It just has to get to 97.32. It's a 1 point higher. It shouldn't be a big deal if this is a new buy mode starting in the daily of the dollar. Then what we're looking at is that the trend line is suggesting, because it went to a lower low, that it'll go A, B, and C starts at 96.71. 96.71. So there's still room to pull back, but right now this is a great candle. And I would not be fighting this candle, especially when you're looking at the EUR, USD, dropping sharply from a what? From a peak D. Remember how important those Ds are? Let me put my down arrow because it's crossed negative. Everything's negative here. This is, you'll hear at TFNN, you'll hear people talking about a one-to-one expansion. In my work, it's a little bit different. This is the expansion that you're looking at. That would be, in the Chapman wave, a pattern that I call a parallel one-to-one. There's a difference in that you're looking at a time constraint, and that time was already pierced at the time constraint from here would have said that on the 22nd, the time would be a little difficult to judge because I have to use the 120-minute chart, but it would have said about an hour and a half ago, it should be testing one-to-one, should be testing 1.120, and now it's at 1.112. So it's already tested and it's broken from the 1.2 to the 1.1s. So let me just get rid of these. I don't like messy charts. I know that sometimes they look messy, but they're telling us important information. Now, this is going to be really important. Why? Because the volatility index, which should have been pushed down even further with the last move to the upside into the 300s, is in fact still, look at this, 1475 right now. The low yesterday in a potential alternate count of G/C was 1441, and today's low is 1445. Here we are, magnificently higher in the New York Stock Exchange. This is based on the New York Stock Exchange. Breaking out, in fact, to a leg ABC. Oh, isn't this interesting? Even if this was not an EFG and recycled, if this was from that low, A, B, C, this would be D. So this is a big move. This is a big move in the New York Stock Exchange because it's saying at 10,462, if it's able in the next day or two to even touch 10,518, all of a sudden the magnet of this resistance at 10,062. And look how long it's been since it was even close to the 200-period moving average. It goes all the way back to August, a daily chart, back to the August area where it was testing. It was support, then it was resistance, then it was support, then resistance, and bam, it breaks away. Now it's trying to get close. So that MACD is good, stochastic is good at 92%. So far, all the little duckies are sitting in a line and saying, yep, we're not flying south, we're flying north. And that's the way it is. So going back to the VIX index, it's saying there is still some believers that you've got to have some kind of, how can I put it? You've got to have some kind of cushion, or let's put it the way that it's normally thought of, some kind of insurance policy, and that insurance policy is the VIX index. But that VIX index is pulling away from the 200-period exponential moving average of 1636. It has finally gone to the 14s and it's trying to hold there. If the VIX index with a flat stochastic and the MACD not doing very well stays here below 15.30 today and tomorrow, that allows the market to go higher. When the VIX index suddenly turns around and you get the pattern that I was indicating was a possibility here of the arch formation. Now I have to lift this up. This is what I show my subscribers every day. This is the overview section, very comprehensive look at all the different markets and what's moving and what's not. If it, in fact, okay, how am I going to do that? There you are. I've just drawn it in. If in fact you get the cup formation starting, and I suspect by Tuesday you're going to see some kind of a pullback, that's going to be very important. How it pulls back is key, because if the Dow, which is trading at 17,474, suddenly breaks under, yesterday's high was 17,314. If the Dow suddenly, by Monday afternoon, Tuesday, if it's dipping down and it's starting to trade in the 17,280s, about 200 points lower than it is right now, then this particular move says, okay, I'm done. Now we have to look at the supports and how well does the market hold. But this is really, it looks like a breakout to me. This is very important. And the VIX is denying it. The VIX still has room to go even lower. So we're going to watch it. Oh, and on the pullback, if the volatility index takes out yesterday's high of 16.70, then we're in for a deeper decline. But at this particular point, I think a lot of people have been left at the station and they're just looking. That's why when the question came up a little while ago, well, would you be buying AAA and UTX and GE? I'm saying at least have just a little nibble if you feel like I do. This is a very important moment, and that the Dow came through instead of being down today. Imagine if it was down 305. The bearishness would be overbearing. I mean, I could just feel it starting yesterday. And we took a very small position, more an insurance position, and that was taken out for a small loss. And I couldn't care less. I didn't want to be stuck with a heavy position saying, oops, and then not get out. You don't put a stop in a market like this or a buy stop. You can be looking back and say, that was a big mistake. I was so careful all the time, and I just let my guard down for a moment, and now look what's happening. So, okay, let me do this. I would like in the next, for the next segment, just to prepare a couple of things. And one will be this 10-minute chart. You see how we've expanded that move to the upside? Remember what I said about the move here, that is probably not an E, it's probably an alternate count. In this particular instance, is the exact opposite. That D is saying we're just about to bump into very strong resistance. Basil Chapman, I'll be back sitting in for Daryl Mark. My pleasure to be here, and the Dow's up 303, S&P's up 35. Very good. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, folks. Hey, let me tell you, if you want to get an education in relativity of looking at different indices, different technical tools in relation to where they were and where they are, how you can use them best, Steve Rhodes, best you can do. Just a great show coming up here at TFNN, and just take the opportunity to just go through with Steve the way he looks at markets. Just a fascinating perspective. So the question I had here on GE was, GE overbought, most overbought since late 2013 question mark, short candidate. Okay, I would not short the leader of the pack to the upside. I just don't see I want to short something that's been the leader of the pack for 3 years, 4 years, running out of momentum like we have today, gone back into one of our shorts of a sector that is rolling over, making the arch formation that we've seen how it works. The lowercase h that goes to lowercase m. That's what I want. So no. And the question was Berkshire Hathaway. Yes, Berkshire Hathaway is doing really nicely for the first time. This bar was the most important bar, but it is becoming just a little overbought. I would different to the others. Because of the pattern that we've looked at, I would take a little more time with Berkshire. I'd rather at 136.60 up 3 right now. I'd rather take a week or so to see how it pulls back to the 130. I said the 134 to 132 area. That's where I would like to look at it again. Maybe start a little position at 133.87 and give it just a little time to see if there's upside momentum to continue or whether it breaks down. So can you please highlight divergence of the weekly on Berkshire money flow? No, there is a methodology using money flow. I actually don't use money flow, although I actually appreciate it. I like it. I just don't use it that much. I'm kind of stuck on my normal things that I look at nowadays. So, okay, this is what I want you to do in the remaining few minutes. Now, folks, if you like the show and you're interested, and you see these charts, remember daily, weekly, monthly, 120-minute chart here. If you like the way that at least you like the thinking and you want to know more about it, please tune in. 11 o'clock till noon, I love doing this and I take your questions. So Berkshire Hathaway right now is improving a lot. But it really has to, if it closes in the next 2 weeks underneath 130.50, make it 130. Close under 130 says, uh-oh, not ready for prime time. The others are doing something very differently. So the question on GE was, would I short it? Yeah, on a very short-term basis, not yet, but it's real close, probably Tuesday. But I'm only talking about, 1.5, 2.5 points to the pullback. Maybe it goes down to 26.50 and retests the 200-period moving average support in a quick move down. But as it's standing right now, I'm looking at it and I'm saying, gee, I want to see how it tests the 27s to the 26s to see if I want to actually buy it. So that's the way it is. Now, the cyclicals are doing fantastically, and that's the area you want to be staying with. Let's just have a quick look at remember I said I'd look at race. I think, race, 10-minute chart. No, that's wrong. ESZ15. We were looking at, I said, this is probably going to be a peak D. So we've got to be real careful just for the short while here between 1 o'clock and 1:20. Let's see what happens. If there's no new high in the S&P above 204.8.75, then you've probably made at least 10-minute chart. A short-term top in a 10-minute chart means 30 minutes to 40 minutes of consolidation. If it takes longer than 30 to 40 minutes, and the S&P gives back from 246, slides under in this A-shaped pattern. This is what I call the Eiffel Tower, straight A, capital A. And in fact, what it does is instead of just having, I'll do the two chart patterns as we go out. See, that's a rectangle formation that says the 242 should hold the support and should try for another high and just chop around. The one that says, uh-oh, a pattern is if it takes out 2039. Then you got to be watching out because it could pull back quite sharp. Hey, I hope that I helped you. I hope it was interesting. And I'll be back for my usual show tomorrow at 11. Thanks for being here and have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.